The African Private Capital Association is the leading voice for private capital investments in Africa, providing research, advocacy, and capacity building support to its investors. Since 2012, Africa's Legal and Regulatory Committee has helped members navigate Africa's complex legal landscapes through publications, training, Africa-branded legal templates, and country-specific regulatory guidelines covering business formation, governance, taxation, and exits. The LRC continues to expand its resources, developing new templates and sharing insights to support investors across the continent. In this podcast, we'll tap into the views of the committee's co-chairs on the private capital markets in 2024, what 2025 may bring, as well as the expertise as they explore legal and regulatory trends shaping private capital investments in Africa.
Good morning, good afternoon, everybody. I'm Mark Kenderdine-Davies, and I co-chair Africa's Legal and Regulatory Committee with Jen Chimanga, who'll introduce herself in a few seconds. The members of our committee are lawyers at law firms, private capital funds, and institutional investors who share our interest in the African private capital markets and are using their skills to deepen it. I'm also the Chief Legal Officer at British International Investment plc, which is the UK's development finance institution. We've been investing in businesses in Africa since 1948. And indeed, last year we invested 1.18 billion on the continent, which was about 60% of our total investment. And we're working really hard to match or surpass that in 2025. So with that, it's over to you, Jen.
Thank you, Mark. I think this is our first podcast together. Very, very excited about that. Hopefully one of many to come. So as Mark said, I am Jennifer Chimanga. People call me Jen, and I am privileged to co-chair Africa Legal and Regulatory Committee with Mark. I'm a partner at international law firm Clifford Chance, where my practice focuses on M&A in the technology, media, and telecom sectors. I also co-head our Africa group alongside Mustafa Murahib. And as a firm, we've been operating on the African continent for almost as long as BII has been on the African continent. And I'd like to think, Mark, probably longer, way before either of us were born. And so both of us are really, really committed to the continent. And so it is really a pleasure to be having this conversation. And Mark, I would like to kick us off by just understanding what your reflections are on the past year when you look at the investment climate in Africa in that year. Would you see it as having been positive, neutral, or negative?
Sure. Well, look, being the cautious lawyer that I am, the views that I'm about to express are very much my own views. I think it's important to say that, and I know, Jen, you feel likewise.
Absolutely. Thank you, Mark.
I'd say that the industry had a neutral, bordering negative year, but with plenty of bright spots. It received less capital from and returned less capital to investors than in prior years. But it's been tough. It's been tough for private equity fund managers generally. It really isn't easy investing when foreign exchange environments are so volatile, nor is it easy selling companies. Fundraising has been difficult too, with investors wanting capital back with a return before committing capital to new funds. Investors are very focused on their liquidity. I think it's fair to say that private credit managers have had a better time of it. They've benefited from a clear market opportunity as commercial banks, the traditional suppliers of longer-term credit, have left some of the African markets, yet demand for credit from small and medium-sized businesses remained. And of course, that offers private credit providers attractive risk-adjusted returns. My company has invested $165 million to date in 5 private credit funds, which are now providing credit to approximately 100 companies in 20 countries. And we've even established a finance company of our own in Ghana from scratch with a 50 million investment, but we'll get to that later. Some African venture capital managers have seen success too, and the development of an active venture ecosystem in Africa really bodes well for the future. And I know that you're going to be talking about venture and tech investment later, Jan. There were some other bright spots too. There have been a lot of regulatory changes on the continent. And again, we'll talk to those later. But it's really encouraging to see domestic African investors, particularly pension funds and insurance companies, committing more capital to African private capital funds. And a great example of that being investors in the AFD, the African Development Bank sponsored Africa 50 Infrastructure Fund. Development finance institutions like ours continue to invest countercyclically. Some, for example, the African Development Bank have a greater appetite for equity investment than before. You have the European Bank of Reconstruction and Development. They've expanded their footprint in Africa and will soon be able to invest in 6 sub-Saharan African countries: Benin, Cote d'Ivoire, Ghana, Kenya, Nigeria, Senegal. And the IFC has appointed a new head of African investments, Ethiopia Stafara. So subject to US politics, of course, we anticipate increased efforts there too. Another development I'd like to highlight is the increased availability of concessional capital in the private capital market to finance investments that be funded, particularly climate finance related ones. And so we've seen a much greater appetite for blended finance structures in 2024 than in the past. So in summary, 2024 was a tough year for the industry, but there have been some really encouraging bright spots, and we're going to focus on those a little later. But hey, Jen, can we turn the tables a bit? Where have you seen growth and why? And what are your views on more generally on the investment climate, and perhaps some of the challenges that private capital investors are still facing?
Thank you, Mark. I mean, I think what you say really resonates in terms of a very tough investment climate, very challenging sort of macroeconomic climate, but with bright spots here and there. And, I like to look at things from a sector perspective. And when I look at the sectors that have experienced growth and continue to experience growth, these are largely, financial services and fintech, and I'll come to the reasons for that, renewable energy and climate tech, as well as, although to a lesser extent, in the past year, consumer-driven sectors, so fast-moving consumer goods, healthcare, agriculture. But if I can hone in on the 2 sectors that I think have continued to see growth despite this climate. When we look at fintech, for example, we continue to see the rapid adoption of digital tech really enhancing financial inclusion and digital services. And then you look at the youthful population, this young tech-savvy population that's holding mobile phones on their hands, this deep internet penetration, really driving demand for digital solutions. And at a policy level, we're also seeing government policies being put in place and incentives to support tech innovation. And as a result, we continue to see a lot of investment in financial services and fintech. And, and last year, we saw 2 new fintechs become unicorns in Africa. Moneypoint, which became a unicorn following $110 million Series C funding that was led by DPI. We also saw Time Bank becoming a unicorn through its Series D, $250 million funding that was led by Nubank. My firm advised on that. And so that area will continue to grow despite the macroeconomic headwinds due to the factors that I have just described. And then on renewable energy and climate tech, again, stepping back, you're looking at a continent with abundant resources, whether that's solar, hydro, or wind. And then you look at the energy deficit that this same continent faces. And then you've got the climate change and the energy transition that's really driving investment. We've got major companies and investors that have made global commitments to reduce carbon emissions. And so all of this creates a really conducive and investment environment in this particular sector. And then you have to add you can't forget the tech angle to this. We have seen tech-enabled energy solutions like Copper Solar attracting investment. They raised additional funding recently. And of course, BlackRock last year made their first investment into Africa, which was into a 310 megawatt wind farm in Kenya. So key sector really continuing to grow. But equally, some of the consumer-driven sectors naturally will also attract investment, just given those trends that I have defined. And then in terms of challenges, Mark, I think the sort of twofold. And when I look at the past year, I see the impact that the global economic headwinds have had on Africa. So, we were operating in a high interest rate environment, inflation, and this has resulted in challenges at a domestic level in African economies, such as, once again, inflation, a lot of countries really facing debt management crisis, Forex headwinds. We saw some of the major economies such as South Africa, Kenya, and Nigeria really grapple with this economic volatility and really working hard to put in place fiscal policies to address particularly the FX issue. And then at an African level, we've continued to see pockets of political uncertainty driven on the first hand by the usual sort of election cycle. We had elections in South Africa, and that uncertainty, not knowing whether we were going to have a coalition government or whether one of the parties was going to be a majority government. And, that always causes anxiety amongst investors when one of the larger African countries is going through elections. And also we saw, I can't fail to talk about the Gen Z-led movement in Kenya, which caused a lot of excitement worldwide in kind of seeing this youthful African population begin to demand, better governance from its leaders. But obviously that period was a period of unrest for investors as well. And of course, we've got the ongoing conflict in Sudan, and we're seeing intensifying conflict in the DRC as well. And DRC in particular is a major economy within the Eastern Central African region with lots of investment potential. So I think, this ongoing conflict obviously is causing a lot of headaches for investors in particular sectors such as mining and financial services. And of course, all of this results in quite a challenging exit environment. And so, you mentioned this earlier, Mark, that it was quite a challenging exit environment for a lot of investors. And this is a direct result really of some of these, macroeconomic headwinds, particularly the FX volatility that we saw last year. And so that's kind of how I see it, and kind of moving it to what you and I do on a day-to-day basis, which is legal and regulatory. I'm interested, Mark, to maybe start on a more positive note and share what you've seen in the past year in terms of positive legal and regulatory development on the continent.
Yeah, thanks, Jen. Look, I think 2024 was really quite a good year from that perspective.
Okay.
There was plenty to gladden the hearts of private capital investors on the continent. Why? Because we saw quite a lot of positive changes, and they were mainly driven by the desire of governments to attract foreign direct investment and encourage their domestic pension funds and insurance companies to invest in domestic equities rather than fixed income. So we saw positive changes in Morocco and Zambia in 2024, hot on the heels of similar changes in Cote d'Ivoire, Egypt and Nigeria in the prior year. Some of the biggest news, of course, was in Ethiopia, which is Africa's fourth largest economy, when the government decided to float the birr, its currency, liberalize its banking sector and open a stock exchange, the ESX in Addis Ababa. And it's the first time that they've had one there since the 1970s. And so all that's been underpinned by significant legal and regulatory changes. So you've now got foreign banks able to invest in domestic banks, and likewise foreign telcos, investing in domestic telcos. And as you know, we've committed a considerable amount to investment in Ethiopia in that sector.
Yeah.
Moving south a bit, in Uganda, we've seen legal regulation, particularly tax changes, which have specifically been designed to attract private capital into the country. In Rwanda, the government continues to fine-tune regulations in relation to the Kigali International Finance Centre, which is becoming a conduit for capital into Southern and East African businesses as well. And look, I could provide lots of examples, but the point here is that governments are working hard to create the right enabling environments to encourage investors, domestic and foreign. They want pathways, in particular, they want pathways for local savers to invest in productive assets. And we think that this trend will continue in 2025. But it's important to remember that the changes I've highlighted here all required strong political will. So more can only be expected if governments see the value of deepening their private capital markets to attract more domestic and foreign investment. So look, I've been getting a bit carried away here, Jen, and I've given some examples of some positive reforms. But
that's not a rosy picture, Mark.
But there are other areas which are still giving investors pause for thought. Hey, let's be honest, headaches, which really do require government attention. So what changes do you think, right? You're an M&A lawyer, you do lots of cross-border work in Africa. What changes do you think investors would appreciate? What would make their lives better?
Thank you, Mark. I feel like, just listening to you, I feel like what these governments have been doing is kind of what you know, when you're dating and you're kind of presenting the best version of you. So, you know, come into this relationship, come into our countries, and we're going to have this amazing investment climate for you. That doesn't always translate to successful deals, unfortunately. You know, once you're in the country and you're making acquisitions or exiting your investments, that's where we tend to see most of the headaches. And, you know, as an M&A lawyer, I can't fail to mention merger control, which, you know, is a significant aspect of most M&A transactions globally, really. And so it is one area where, you know, if you're asking me, you know, investors investing into Africa would like to see more streamlined and more harmonized, this has to be the area. This has to be the area. And we continue to see quite a lot of challenges in this space. And the challenges I'm talking about are kind of twofold. You know, at a domestic level, where a lot of these merger control regimes are still very nascent, but there's a lot of regulatory uncertainty, lack of guidelines around what is notifiable, quite hefty filing fees in some cases, and quite a lot of uncertainty just around, you know, review periods. How long will my deal take to be approved? What can I expect? And so there's definitely room for improvement when it comes to providing that clarity to investors at a domestic level. And then, of course, unlike Europe, you know, the African merger control landscape is quite fragmented. You know, you do have the regional blocks with, you know, developing their own merger control regimes. But what that has done is just create an additional layer of oversight without really any streamlining between the two. And there's still a lot of uncertainty in some of the major economies as to when transactions are notifiable at the supranational level, and when they're only notifiable at domestic level, or where indeed the domestic level has the power to refer back a merger or an acquisition back to within its jurisdiction. So a lot of work remains to be done there. And I dare say, Mark, I think for organizations such as AVCA and even some of the regional venture capital associations, this is one area I think where we can really combine our legal expertise to work with regulators to improve, you know, some of these challenges. And then I think the other bit that is worth flagging just from an M&A perspective, because we still tend to see it in some of the major economies, such as South Africa and Nigeria, is exchange controls. So you've still got some countries with quite stringent exchange controls that impact the ability to repatriate funds. And so obviously as an M&A lawyer, this creates more work for me, having to devise creative structures and bespoke deal structuring to enable that repatriation of cash. But quite frankly, I think this is another area where government and political goodwill and support can help improve the investor experience. So that's kind of the darker side of, the very positive developments that we saw last year, Mark. And I want to move us into a different topic, which is around fund managers and fund management, because obviously a lot of AVCA members are fund managers. What's been happening in their world? Are you seeing new strategies? Are you seeing any manager mergers? What's the fundraising environment been like? Are we seeing end of fund life fund solutions? What are you seeing in this space?
Well, I alluded to how tough 2024 had been for many fund managers earlier, with investments taking longer to execute, businesses longer to develop, and exits harder to achieve, although, of course, there were some exceptions, and I'll call out Actis here for their exit of a South African fiber company is a good example of one of those. Some investors are unwilling to re-up, i.e. come back to and provide more capital to their fund managers until they receive capital back from previous investments. So managers really need to focus on exits and liquidity if they want potential investors to start reviewing new fund propositions now. It's been great to see domestic investors allocating more capital to the asset class. Likewise, development financial institutions like ours being counter-cyclical and supporting the industry at a time of capital scarcity. I think some large managers are returning to the market this year. Two of the most successful Africa-focused fund managers are seeking to raise, I think it's 1.75 billion US between them. And I absolutely wish them well with that. But I do ask myself, if they achieve their target fund sizes, what impact will that have on available capital allocations to other African fund managers? How much will be available to other folks out there seeking to raise capital? I don't know the answer to that question. As for new strategies, well, we're unsurprisingly seeing more dedicated climate funds, in addition to the usual generalist growth funds, infrastructure funds, etc. And of course, we are seeing more private credit funds. Moving a little from funds to other pools of capital, we'd really like to see more Middle Eastern sovereign wealth fund type investment, particularly in climate finance. But we sense those investors are interested in writing large checks to acquire gigawatts as opposed to megawatts. They really are looking for large energy plays. Another thing that we've watched has been the gradual development of Africa's funds secondaries market. Investors like us are increasingly unwilling to sit on our hands at the ends of fund lives. We're creating special situations teams to work with fund managers and others to improve our liquidity. We're also, this is really important, also beginning to see emerging market investors who like secondaries in their portfolios following secondaries, reducing blind pool risk. And some of them are definitely looking at African fund investments now. So that is a sign, I guess, of a maturing market. You mentioned mergers. Well, we're not seeing too many of them yet. New teams, yes. Merged teams, no. And I sort of reflected on that, and I'm smiling wryly when I say this, but the private equity world has plenty of big personalities. And there's a little bit of me that thinks that perhaps everyone wants to remain the king or queen of their own castles. So, Jen, I've spoken a bit about funds, and that's an area where I have some history. But as I said earlier, one of your areas of expertise is mergers and acquisitions and direct strategic equity investments. So let's talk a bit about that. What are you seeing and what's exciting you in the African M&A space?
Thank you, Mark. I think M&A is also an area made up of very big personalities, I would say. So I think a very similar analogy can be made there. But when I look at particularly the sector that I'm most involved in globally and then casting that onto the African continent, I am actually seeing huge opportunities for bigger checks. You spoke about this Middle Eastern investment kind of being a little bit being shy of the market because of deal sizes. Well, I think that the digital infrastructure opportunities can present quite a compelling proposition for investors that are looking to write bigger checks. But stepping back, with the rapid digital transformation that we're seeing on the continent, that is being driven by the increasing internet penetration, mobile phone usage. I mean, even my grandmother has a mobile phone by now. And all of this is just creating opportunities for digital services, e-commerce, fintech solutions, agri-tech solutions. The opportunities are endless there. And we are even seeing this give rise to a shift by the telco sector players themselves to tap into those opportunities by transforming their own business models. We've seen a lot of the telcos, and by the way, this is not unique to Africa, really. Many telco companies are tapping into this space primarily to compete against big tech. And so they are delayering their business units, their business functions, from from their traditional connectivity business. So they're setting up infracos, fincos, data center companies, and digital solutions, separate businesses in order to attract capital into each of those different business lines, grow their revenues in that way, but also meet the heavy investment, capex needs for the investment in connectivity. And then, we see this demand for connectivity driving investment in digital infrastructure, whether that's fiber or data centers. And in this, we see industry players like telcos, local data center companies, local fiber companies that are being set up to invest in this space, but attracting huge amounts of capital to fund digital infrastructure. And then, of course, we're talking about 4G in Africa and 5G as well in some of the leading African countries. Now, when you go to Kenya or South Africa or Nigeria, you can access 5G 5G connectivity in some of the larger cities, and all of this requires huge amounts of investment. And then, of course, we've now got AI. We cannot talk about this sector and not talk about artificial intelligence. And Africa wants to be a major player in AI, and we see a lot of attention given by industry players in this space. Actually, quite often I'm surprised when I go to Kenya or South Africa to see some of the use cases that are almost commonplace in some of these countries that we still haven't caught up with in the more developed economies. So that's really fascinating. And, what does that mean for investors? It means opportunities for investment. I mean, you've talked about your investment in Ethiopia in the telco sector. That's a huge investment. That the private capital has put into that sector in Ethiopia. But we also saw, again, your portfolio company, Liquid Intelligent Technologies, raising additional funding last year to expand fiber optic access, across Africa. MTN Group announced a $1 billion investment to expand 4G and 5G networks across South and West Africa. And it spun out its fiber business into a completely new rebranded business called Biobab, which is now rolling out fiber. And, I was privileged to advise on its partnership with Africa 50, setting up terrestrial fiber network connecting the east to the west coast of Africa. I mean, such an impactful project, which will really reduce the costs of connectivity across continent while improving the internet speeds. So hopefully that gives you a picture of what I'm seeing in my space. And it's, again, back to the bright spots that you were talking about earlier. But bringing it back to your space, Mark, you mentioned private credit earlier. Can you tell me what you're seeing there? I think we're seeing growth in that area, but I'm interested to hear from you whether you think this is impactful and what solutions this is going to provide to the funding needs of Africa.
Yeah, well, sure. Look, I've enjoyed the positivity you've been exuded. I reflect that we were a little gloomy a little earlier in the call, but hopefully we're getting more positive as it continues, which is great to hear. And yeah, look, I'm really positive about private credit. As I said earlier, it does offer a very attractive investment opportunity on the continent. Africa receives some of the lowest levels of domestic credit in the world, and credit formation is low. So this undeveloped market is attracting fund managers who are able to provide flexible credit to small and medium-sized businesses that really need that credit to grow. And, competition has decreased following the departure of the likes of Standard Chartered, Société Générale, BNP Paribas from the market. So we're seeing managers entering the market, offering an ever broader range of products, senior loans, mezzanine loans, self-liquidating instruments, etc., targeting various return levels. And the one thing they can do is they can offer real structural and security flexibility, which makes them quite attractive to borrowers. And of course, they can negotiate downside protections, which are attractive too. So we really see this market growing. And the other thing we're seeing that some African governments are open to allowing private credit providers to do new things because they want capital being funneled to those small and medium-sized businesses because, after all, they're the engines of economic growth. So, for example, the Ghanaian government helped us establish a finance company in Accra, which will lend in hard and local currencies. We invested $50 million in it. We hope to do the same in a southern African country soon. And, we anticipate that more governments will show openness and flexibility in future. And that's going to help the market grow and attract perhaps the more risk-averse investors. So, of course, there are more risk-seeking investors out there that are quite content to take the equity risk, and we do that with much of our portfolio. But it's two sides of the same coin. So yes, very optimistic about the private credit market, and we can only see that growing. So, that's something else to be optimistic about. Yeah. So whilst we're on the topic of optimism, Jen, is there anything else that you're feeling good about?
Well, when I look at 2025, actually, before I get too optimistic, I just need to say I think it will really good to see resolution to some of the conflict that we've seen in the region, DRC and South Sudan. And, I know that there is a lot of political interest in that conflict being solved. And I think that would be a good thing to see in 2025. But putting that to one side, I think it's fair to say, Mark, that I feel very optimistic about some of the countries I mentioned earlier, the major kind of hubs that almost like drive the African economy. South Africa, Nigeria, and Kenya really seem to have stabilized at a macroeconomic level. Some of the fiscal interventions in Kenya and Nigeria are beginning to show signs of sort of positive outcomes. South African election has now come and gone. You've got the Government of National Unity, which has been sending really positive signals to investors that, we're open for business. South Africa is open for business. And actually, when I have conversations with my colleagues in South Africa, the mood is really quite upbeat in terms of the investment outlook for 2025. So that's fantastic. And then tech will continue to do what it does. It will continue to play a prominent role on the continent. And what excites me more, I think, this year is to see how Africa and African businesses and investors in Africa will rise up to the AI opportunity. We're certainly seeing strong interest at a political level to really put in place national AI strategies and, national policies around some of the key risks that AI poses in really trying to make sure that we're catching up with some of the developments that we're seeing elsewhere. Africa wants to participate meaningfully in this AI opportunity and not just as a consumer. So that's really exciting, and I'm curious to see what that will mean for investment in Africa. In fact, we are holding, Mark, a conference in March in South Africa on this topic of AI. And then finally, I'm also really fascinated to see how things will develop on the regional cooperation front. We have a new AU Commission chair that was appointed this February. We've obviously, of course, African Continental Free Trade Area, which, it's another year in the life of that particular treaty. And I'm really curious to see whether we will continue to see that increased intra-Africa trade, intra-Africa cooperation, and what that might mean for investors in areas such as transport and logistics, as well as just African businesses that are looking to grow and expand across the continent. So I'm very optimistic, obviously, but a lot of this kind of remains to be seen, as always. I don't know how you're seeing it, Mark, as we come to a close.
Again, broadly, very, very positive. And what we haven't mentioned, we've been talking for a while now, we haven't mentioned North Africa at all, of course. And, we have a very active office in Cairo. They're busy. Yeah. They're looking at investments right across North Africa. And there's a lot of opportunity there as well. So again, Egypt, Morocco, lots of exciting stuff happening there. So I wanted to flag that. I suppose the other thing is that just today, when we're recording this, a lot of international financial institutions are gathering to talk about mobilizing more capital for Africa. Yes, we do live in uncertain times, but there's a lot of goodwill. There's good intent out there, and I'm expecting and hoping to hear positive news in the coming months emanating from that. So look, I think to end the call, to those of you that stayed on with Jen and I, thank you very much. We hope that we've piqued your interest in some way. And if you're interested in anything that we've said or learning more about AVCA, please do contact AVCA by email. If you want to do that, their address is AVCA, that's AVCA, at avca.africa. So they're easy to contact, they're a great organization, and spend some time looking at their website and learning a little bit about them. So with that, it's a goodbye from me. And Jen?
Bye. Thanks for listening.
Wonderful. Thank you, everybody.